Well, hi guys, welcome to this Money Control live stream. You're tuned into IPO Watch, and today we are putting the focus on liquor company and makers of Officer's Choice Whisky, Allied Blenders and Distillers. The IPO has opened up for subscription today and will close on the 27th of June. The IPO price band is between 267 to 281 rupees per share, and the issue size is 1500 crore rupees with a fresh issue of 1000 crore rupees and an offer for sale of 500 crore rupees. Now we are now joined by the management of the company right here in our studios. Joining me is Alok Gupta, who's the MD, and Ramakrishnan Ramaswamy, who's the CEO of the company, to discuss the post-listing strategy as well as growth and future expansion plans going forward. Gentlemen, great to have you in our studios this morning. First of all, congratulations and welcome to Dalal Street. Anchor investors have already said, or in fact raised a toast to your issue, right? You have raised somewhere around 450 crore rupees via the anchor book. You have marquee names like Goldman Sachs, BNP Paribas, LIC Mutual Fund. They have invested in the IPO via the anchor book. How confident are you that the street will raise a toast to your issue?
Well, the issue is fairly priced, so we are reasonably confident that the investors would look at the opportunity that this stock offers.
Right. Coming to the issue of promoters trimming stake via the IPO, right? So post this IPO, how much would the stake come down to, and would they be looking at further diluting stake sometime in future?
The promoter and the promoter family owns 100% of the company. Post IPO, their stake will be down to about 81%. That leaves a little room for a further dilution, and I think for the right reason at the right time, certainly one would look at further dilution.
Right. Mr. Ramakrishnan, coming to you, the total debt of the company stands at somewhere around 800 crore rupees, right? And the proceeds from the fresh issue will be used to retire debt. So would you be completely retiring your debt and becoming a debt-free company after the IPO?
We will be retiring the current debt in toto, but we will be required to borrow some more money for the working capital. Okay. So if you look going forward, there will be a considerable reduction in debt and the interest cost.
Right. And in terms of finance costs, could you give us a ballpark figure as to where it's headed?
Like Ramki said, that the object of the issue is to retire our current debt, which is a high cost debt. So the entire debt of 800 crores will be paid out, and we expect a significant reduction in our interest cost, maybe halving to start with, and over a period of time with internal accruals and better margins, it will come down further.
Right. Coming to your business, the biggest contribution comes from the whiskey segment, right? Would you keep your business focused on whiskey, which contributes somewhere around 97% to the business, or would you focus on other offerings to scale them up?
Well, to start with, 65% of total volume in the industry is whiskey. So it is the single dominant flavor. I mean, that's what Indian consumers love. So for us, it's a position of strength that we have 97% of our volume coming from whiskey, because we are playing in the largest flavor set. Having said that, moving forward, the larger part of the portfolio focuses in premium and luxury segment, where the new brands would be a combination of both whiskey and non-whiskey. Okay. So in January this year, we launched our first non-whiskey premium product, that is Zoya, right? Which is a gin. So I think that's a step towards moving from being just a whiskey company to a non-whiskey company with focus on premium and luxury products.
So how do you plan to really scale up the premium segment? Because you've just entered this segment, right? So anything that we can expect by way of scaling up brands going forward for the next two fiscals, Mr. Ramaswamy?
Well, we have a pipeline of brands, what we plan to do on a future date, and we will be doing that as per the game plan what we have, and we anticipate the trend from the current business segments what we have of premium and this to move ahead in a very big way from where we are today. So I mean, if you look at the total contribution between mass premium and FP&A, P&A, it will be in a very, very significant move. So if we are at currently 50-50, there will be a significant change in that.
So, sorry if I may add to what Ramki said. I think a lot of work has been happening for the past few quarters. So it's not that the work starts now from I think 2 or 3 essential components which are required. What we believe with a sense of right to win. One is the right set of products. A lot of work has been happening over the last few quarters, both in terms of building our brands and bringing the right partnership brand into India. Secondly, in terms of capability, the premium and luxury segment would require significant skill in terms of key accounts and on-premise. So building a division called Prem Brands. So a lot of work has been happening for more than a year. So I think where we are is what I would call is at a takeoff stage.
Okay.
And what happens on back of the IPO is once we pay off our debt and retain the balance towards our growth capital, we are able to move forward on launches of brand that have been sort of waiting to be introduced to the Indian consumers.
So what about the distribution network? Would you be expanding that as well to sort of improve your market share in the premium segment?
So luckily that's our area of strength. ABD was founded in 1988, so we've been in this business for 35 years,
right.
and we have a width of distribution of over 90%. So we cover about 77,000 outlets right from Jammu and Kashmir down to Kanyakumari and all the way to Tripura down to Maharashtra.
Right.
Having said that, from premium and luxury segment, we need to build our capability on the key accounts bit, and that's the team that has already been built out. So I would say we are ready in terms of participating in the premiumization story of India.
But I think the key markets are Telangana and UP, right? So what is the game plan to expand in other regions as well?
Right. The key markets, just a bit of a color to this is that when the data that we're looking at is our gross sales, and in many markets we have to add excise duty, therefore you see a larger share of revenue coming from there. The right way to look at this top 5 market is through the net sales value. So Telangana of course is the largest market, Maharashtra, West Bengal, UP, Rajasthan, then many other markets get added to this top 5 markets. So I would say enjoy reasonably good market shares across the length and breadth of the country, and idea is to continue to focus across all markets.
Right. In terms of gross margins and return on capital employed, which are the areas where you see the highest contribution coming in from?
Well, from a product portfolio that is now sort of evolving from mass premium to P&A and premium and luxury, the significant shift that we will see is in gross margin expansion. So both revenue growth and gross margin expansion would mean significantly higher cash on the table, and on back of debt being paid out, we see significant reduction on the interest that will impact, the first one will impact EBITDA and the second one will impact the profit. So that really is the game plan.
So in terms of margins, since we are speaking about it, EBITDA margins, I think you are in high single digits, 7% or thereabouts, but all your other peers like Radico and all, they have double digit margins. So here on, do you think premiumization will drive a double digit growth in margins, and when do you expect margins to hit double digits?
Well, our outlook is over the next couple of years, how do we get to a peer parity EBITDA? And the gap is being addressed through 2 key initiatives. One we've already spoken about, which is premiumization, and second is going to be in terms of our backward integration. Currently 30% of ENA that we consume, which is the basic raw material, is captive, 70% is bought, and the outlook is over the next few years to get to 100% captive ENA, and that has a significant impact on EBITDA margins.
Right. Also in terms of revenues, I was just seeing the financials, 9 months FY24, somewhere around 2560, and for FY23 you guys had topped 3,100 crore rupees. Any targets in terms of revenue, at least with respect to the current fiscal FY25?
What I would say is that we are looking at mid-teen growths, especially coming from P&A and the luxury side of the portfolio, and that essentially on the current base over the next couple of years is really the revenue guidance.
All right. Also, I mean, in terms of market share, where do you stand compared to peers, and any targets here as well over the next 2 to 3 years?
Well, we're the 3rd largest player in the industry. Our market share is about 8.2%, and I would say on back of growing hopefully a shade faster than the market, we should look at a double-digit market share.
And anything that you consider a key risk going forward, because it's a highly regulated segment, right? Alcohol. Could that be a risk? The fact that you are mostly dominant in whiskies, could that be a risk? What do you perceive as a risk to the kind of targets you have in mind going forward?
Whiskey, we don't see a risk, because if you look at data over the last 3 decades, contribution of whiskey has been 65%. So like in every country, there is one flavor that really stands out. So we see this as a position of strength, and going forward, we like to build on that strength. On the government side, I would say that the outlook is fairly balanced. While government has significant say in the matters of policy, but we are also seeing digitization initiative, a far more consultative process. So I'd like to believe that we do not see any significant risk. I think other than macroeconomic risk, which could upset the commodity cycle, because we do use energy for our distillation, or we do use broken rice for our distillation. So it could upset, and if inflation could sort of have a dent on premiumization. But those are macro risks to the industry, so not unique to ABD.
And would you be looking to hike prices to further support your profit margins going forward?
A, we are rightly priced, and B, as you're aware, that price increase in our industry often is a consultative process with the government. So we look at the right opportunity all the time.
All right. I think this about sums up our discussion. Thanks a lot, Alok and
Thank you very much
for taking our time and coming to our studios for this discussion. I wish you all the best, and I hope the street says cheers to your IPO issue as well.
Thank you so much. Three cheers to that.
Thank you
very much.
Well, with that, we've come to the end of this episode of IPO Watch. Of course, you guys stay tuned to Money Control for all your other news and updates. See you at 3:30 p.m. with the market close. Till then, of course, keep following Money Control.